that might be a good play and a good defensive play, even in this market environment. The stock has been doing well. Mike Coe, let's stick with you. Let's talk about Dollar General. I guess generally viewed as a recession play. What do you think the trade here might be?
This will be a single round.
Yeah, so, this is an interesting situation, Dollar General, because this is one of the stocks, I think, that Carter had been discussing and had mentioned that he thought it was probably a defensive type of a play in this situation. And, I'm sort of inclined to agree with that. I think the trade that we should use here is a call spread risk reversal. The call spread risk reversal I was looking at was the June 145 165, 185 call spread risk reversal. So the 165, 185 call spread, selling the 145 puts to help finance that. In this instance, it was trading for very close to even. So you would actually collect about 50 cents at the closing prices that I was looking at. What that means is you're going to get participation from 165 to 185. But in the downside, if the stock should trade lower, and I was looking actually very close to the lows that we saw right when the market rolled over and we saw the worst in March, of 145, that's basically where the stock was sort of bottoming out. I think it hit about 140. That's essentially where you would get long the stock. The idea here is you get upside participation, you get a buffer to the downside, and that's basically, I think, one of the things you want to take a look at, where stocks you like might see further downdrafts if we get further weakness in the markets. And Carter Worth, this is one of your ideas as well, DG.
Well, it's all about defense in certain moments. This stock, just to be as blunt as possible, is outperforming Walmart, which is one of the most defensive securities in the marketplace. And what we also know, and there's several stats to look at, its beta is much better in terms of being low relative to staples and ETFs. You see that there on the screen. But also, its performance year to date, there are only two stocks in the entire consumer discretionary sector, if you look at the chart coming up, that are up. And the only other one, is Amazon. Now, this is an important defensive play. And what I would also point out, and you'll look at the next chart coming forward, is that this has been in a solid uptrend for the better part of 4 years, and it is not cracked the way the market is cracked. Indeed, on a relative strength basis, it is making new all-time highs as we speak. So this is a setup that I think ultimately offers both upside as well as downside protection, and it is something that is basically not really on the radar screen when one thinks of consumer discretion. And again, to be as defensive as Walmart without the grocery exposure is an important circumstance. So Dollar General would like the upside ultimately for a breakout.
Tony Zhang, your take on the Dollar General trade that Mike and Carter just talked about.
So firstly, I really like the options trade because Mike has found a really inexpensive way to play for the upside while giving you the opportunity to own the stock about 10% lower. But the stock itself, I really like this because Dollar General was able to capture a lot of the stocking up that the consumers did right before the lockdown. And historically, the stock is very strong going into a recession, which is where we're heading. And it's one of the few discount retailers that are currently investing in a digital strategy. So all around, a clear winner in this particular space. And as unemployment rises over the next few months, consumers are going to become more price sensitive. And Dollar General, I think, is well positioned for all of that.
All right, good stuff, guys. Looking at Dollar General. All right, coming up after the break, we're going to try to keep a semblance of normalcy here. You have questions. Our traders have answers. We'll take a couple of them for you. Ask the traders. Coming up next right here on Options Action. You're watching CNBC, worldwide leader in business. We're back right after this.
Attention investors, everyone knows you need to diversify from stocks. National Realty's Class A property fund includes prime income-producing property backed by our proven track record. Your apartment building secured, you're recession-proof, you're diversified in 15 locations and have monthly cash flow. This portfolio has $750 million in new construction. Remember, no matter the market, it's always a landlord's market. Call 201-210-2727. That's 201-210-2727. The offer to buy or sell any security is only made by our private placement memorandum. Read first and invest wisely. Past performance is no guarantee of future results. National Real Estate Development Firm. See us at NRIA.net.
Hey, I'm Andy. If you don't know me, it's probably because I'm not famous. But I did start a men's grooming company called Harry's. The idea for Harry's came out of a frustrating experience I had buying razor blades. Most brands were overpriced, overdesigned, and out of touch. At Harry's, our approach is simple. Here's our secret. We make sharp, durable blades and sell them at honest prices for as low as $2 each. We care about quality so much that we do some crazy things, like buy a world-class German blade factory, a Obsessing over every detail means we're confident in offering a 100% quality guarantee. Millions of guys have already made the switch to Harry's, so thank you if you're one of them. And if you're not, we hope you get this special offer. Get a Harry starter set with a 5-blade razor, weighted handle, shave gel, and a travel cover. All for just $3 plus free shipping. Just go to harrys.com and enter 0808 at checkout. That's harrys.com, code 0808. Enjoy!
Dream of owning your own company? Decorative concrete is one of the fastest growing trends in home remodeling, and Concrete Craft, the billion-dollar industry leader, has franchises available in your area.
What really drew me to Concrete Craft was low overhead, a small amount of team can get you to pretty good revenue.
As a Concrete Craft franchise owner, you're not pouring concrete. You're transforming ordinary concrete into extraordinary designs with support from Concrete Craft.
They teach you the marketing side, the sales side, how to do a quote, and then all the way through installation and mixing and colors and different products. You can't learn all this in 2 weeks.
Invest in your future today. Learn more at concretecraft.com/radio or call 888-81-CRAFT. Plus, find out how you can get free airfare and hotel for Concrete Craft Discovery Day. That's concretecraft.com/radio or 888-81-CRAFT. This is not an offering to sell a franchise. Franchise offerings are only made through your franchise disclosure document. Call and ask for details. Sirius XM. This is Sirius XM.
This one might be.
All right, welcome back. Time now to take some of your questions. We got time for one question. Michael, I'll send it to you. It's a very basic one, which is, with most money managers recommending or saying stocks will be higher 12 months from now, do you recommend long-dated options out to January of 2022? Yeah, so, it's interesting. The implied volatility on longer-dated options has risen as well as the shorter-dated ones, but not by quite as much. And the fact is, there is going to be elevated volatility, I think, for some time. So if you're looking for a way to manage your risk and take a longer-term bullish view, I think purchasing longer-term options is a good way to go. But I would consider selling some near-dated ones against it to help offset some decay. All right, good short answer there. We appreciate the question. Let's take another quick short break. We'll be back to wrap it up here on options action. It was a wild week. Dow down 360, ending the week down just about 3%. And we're back with more right after this.
Does your golf game lack consistency, power, compression? You need the Impact Snap Release Trainer, the 2-time Golf Digest award-winning best full swing training aid. Train your wrists and arms like never before to get results like never before. I'm Marty Nowicki, PGA award-winning instructor and owner of the Impact Snap. We are proudly made in the USA. Visit us at impactsnap.com. Use coupon code XM10 and save 10% at checkout. Visit us at impactsnap.com.
Being an HR professional at a fast-growing company often means long hours and an even longer list of daily to-dos. Between processing payroll and fielding employee inquiries, there isn't much time left over to focus on what matters most: driving business results and helping your employees grow. That's where HR technology comes in. Namely is the modern people operations platform that both HR teams and employees love to use. HR teams save an average of 11 hours each week after switching to Namely and simplifying their HR, payroll, recruiting, and benefits efforts. Namely's HR technology can accomplish a whole lot more than just saving time. It can also increase employee engagement and productivity. With Namely, employees can clock in, schedule vacations, enroll in benefits, and post on the company newsfeed, all from their desks or on the go. To see what makes Namely different, schedule a demo of our platform today at namely.com. That's NAMELY.com. Let Namely help you build a better workplace.
These are unprecedented times, which are causing a lot of stress and financial worry for millions of Americans. But here's some good news. If you owe back taxes to the IRS, Optima Tax Relief can reduce the stress in your life by helping you resolve your tax debt right from the safety of your own home. Make no mistake, you don't want to ignore the IRS right now. They can take your paycheck and everything you worked so hard for. But with Optima on your side, you may qualify for help that saves you thousands. Their tax professionals specialize in the Fresh Start Initiative, one of the biggest breaks the IRS has ever offered. Optima is A+ rated with the Better Business Bureau and has resolved over $1 billion of tax debt for taxpayers across the nation. So now's the time for tax help you need, for tax help you trust. Call Optima now for a free consultation. Call 800-901-3022. 800-901-3022. 800-901-3022. Optima Tax Relief. Some restrictions apply. For complete details, please visit OptimaTaxRelief.com.
SiriusXM. This is SiriusXM.
Got 30 seconds left in the show. I got three quick things. Number one, Delta Airlines stock, you're betting on the news. Berkshire selling some of its airline holdings. Delta Airlines right now is down 9.5%. Second thing is that we're going to see you in 2 weeks. You got Good Friday. The market is closed next Friday, so we'll be here in 2 weeks. And most importantly, if you missed it earlier, a happy 50th wedding anniversary to the two people I care about the most, my mom and my dad, down in Winchester, Virginia. I wish I could be with you on your 50th anniversary tomorrow, but I can't. I love you both. Thanks for having me. Everybody out there, be well. Mad with Jim starts right now.
My mission is simple: to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Kramer. Welcome to Mad Money. Welcome to Kramerica. Other people want to make friends? I'm just trying to keep it from losing too much money because my job, not just entertain, educate, teach you, context. Call me, 1-800-743-CBC, or tweet me at Jim Kramer. I gotta be honest with you. We could be on the verge of a depression, not a recession. A depression if things don't go right. We just got the worst monthly employment report since 2009. 700,000 jobs lost. And that doesn't even cover the last 2 weeks where we had nearly 10 million jobs. The bad numbers are just beginning, which is why the averages got hit today. Dow losing 361 points, S&P sinking 1.51%, NASDAQ falling 1.53%. It could have been worse earlier in the day. It's bad. Now, this is going to be a brutal period, but if we handle things right, it will be a short depression. I would call it a recession or a repression, but the first sounds silly, and we don't want a repression. Can we have a mini depression? I mean, we're in uncharted waters. I hope so. Still, I think we're making some real progress on the economic front. Today, countless small businesses applied for hundreds of billions of dollars in loans that will allow them to stay open during the tough period. And the government will forgive the loans if you use that money to cover your payroll, don't lay off your workers. I think it is a terrific program. Full disclosure, I applied for it myself for my 2 restaurants today. Banks all over the country are furiously trying to process these applications. You know what? They're going to be glitches. Nothing's perfect. But perfect here is the enemy of the good, and I celebrate this plan as the best it can be, and the community banks are signing up people in incredible numbers. I want to make this right here. Do you want to make this a grumble-free zone for a moment? Grumble-free about a plan that was done with incredible alacrity, too fast for banks, but fast enough to give hope to a beleaguered nation of workers and small businesses that are represented by 85% of the economy. Here's the problem. As much as I love that the government's basically keeping businesses on life support through the difficult period, at the end of the day, there are no customers. Is it worth it to maintain a business with no customers? Tough call. I'm going to try. Many of the smaller entrepreneurs might have to close because even with government assistance, it's not worth trying to stay open. Or in my case, I'm told, we're closed. They made us close. However, the program is generous enough that in most cases, it's worth taking the money. Trust me. It's a fantastic deal for small businesses. You should absolutely apply for one of these loans if you're watching and you're part of that. And you definitely want to go for the grant part. And if you have any desire to keep your company going until the pandemic's over and things go back to normal, well, you know what? Look into this. Go to the community bank. Go to the Bank of America. This is going to take some intestinal fortitude, and fortitude's in short supply, and this plan helps. I can't blame anyone for wanting to throw in the towel here with stocks. I mean, the truth is, we aren't testing enough people with this disease. We aren't obeying the stay-at-home orders as religiously as we should. We still don't have enough equipment at our hospitals. Worst of all, the virus, it's just terrifying. Until we get a vaccine, or at least a drug that alleviates the worst symptoms, we can't truly beat this thing. So we need the government to keep the economy in suspended animation until there's a real solution. For the moment, the best we can hope is to line up another program on top of the $2.2 trillion rescue package Congress passed last week. I spoke to Speaker Nancy Pelosi this morning. Maybe $1 trillion safe and sound 30-year Treasury bond set at 2% to crush COVID. Money that can be spent literally paying people. Stay in your homes. Total month lockdown. Lockdown. Stay in your home. Here's some money. Each household will get a monthly script, maybe $1,500 worth if you qualify. The script comes in the form of a ticket. If you go outside for something non-essential and law enforcement catches you, they punch a hole in your ticket. Every hole that's punched, you get less money when you redeem the script at the end of the month. In the meantime, the government will pay your rent or your mortgage or your health insurance until the lockdown month is over. Is that too much to ask? That's how we'll win. We use that month to roll out testing sites everywhere. Then when the month is over, we're going to have the virus contained. I know this will be very expensive, but long term, I think it's going to be a lot cheaper to take that hit up front. Month-long lockdown. Don't worry about your bills. Uncle Sam's got you covered. Then we can get back to a normal situation a lot sooner. That's my plan, and I'm pushing it. Grumble-free zone. Without a national lockdown, which is, by the way, exactly what Dr. Fauci wants, and you know he's our hero, people can afford to stay home. The virus will just keep spreading, keep going out. People keep going out. With that in mind, let's go to the game plan for next week. Historically, it's a light week, ending with the market being closed on Good Friday. Monday is all about the COVID numbers, mainly the new infections, and yes, new fatalities. We follow this Scott Gottlieb on Twitter. He gives you the best stuff. You'll know everything on Monday. We already know the numbers will be horrendous. I think these numbers will color trading as we wait to hear about some bending of the curve. And that doesn't seem to be within reach anytime soon. Lots of people still don't take it seriously. That altitude is starting to kill people. As long as the numbers are terrible, money will keep flowing out of the stock market. We're undergoing a wholesale revaluation of equities downward because business will doubtlessly be softer than anyone expects. The only good numbers will be the applications for the payroll protection program. So we want them to be so big that it overwhelms the program and Congress needs to appropriate even more money. Why is that good? Because it shows confidence. It would show us that businesses are willing to tough things out rather than just bailing as we head into a mini depression. Why even bother to own stocks if the economy is about to get incredibly ugly? Because this mini depression will end once we get a vaccine or a powerful antiviral. And once that happens, I'm betting on what we call a V recovery, okay? A V-shaped recovery. In situations like this, you don't know when you're going to get to this. So you buy on the way down. We already got this part done. You buy on the way down so you can capture the furious bull market of the V. That said, remember, I always recommend gradually because you don't know whether the V's right here and we're only right here. I can't tell you yet because this is about science. This is science. And I'm about stocks. Back to the game plan. Now, Levi Strauss reports on Tuesday. And apparel strike class. Earlier in the week, we listened to PVH CEO Manny Trigo tell us a good story about Tommy Hilfiger and Calvin Klein, but it didn't matter because the stores that carry his merchandise are all closed now. Levi's pretty much the same. I mean, I saw Chip Berg, the CEO, at the Super Bowl, and I bet his stock was double the price. Great company, doesn't matter. Wednesday, we get mortgage applications. Home buying has been a real engine of the old economy. I'm betting these numbers collapse. How the heck are you supposed to buy a house if you actually can't visit the property? I know virtual. The whole housing cohort's a house of pain right now. Get the virus contained. You're going to see a horrendous number. It's going to cause things to go down again. Thursday, we have as will be controversial. WD-40. Yes, I'm talking about the reliable and beloved lubricant company. An outfit called Spruce Point put out a short report this week predicting a disappointing quarter. These short sellers knew the stock is ripe for a much lower valuation. Now, it's tough to own any stock these days, let alone one that's under assault by a sophisticated short seller with a very long brief. It's very negative. If you want to buy WD-40, let's wait to see what management says first. No need to court danger. Mercifully on Friday, they got the day off. Maybe we can regroup. It's a treacherous time. I still anticipate the market will retest its lows from the beginning of last week, and we're not there yet. We're not there yet because of this. The bottom line, once again, I have to emphasize this is mainly a public health crisis that morphed into an economic crisis. The only way to get back to normal is by defeating its plague, which is why the government needs to go all out until it does. Let's go to Drew in Minnesota. Drew!
Booyah, Jim.
Booyah, Drew.
I want to hear your thoughts on Twitter and with them being down.
I read the Goldman upgrade today. I thought it made a lot of sense. I think the stock is cheap. However, let me just say, stocks are not going to bottom when we have this tremendous S&P selling every single day. So if you want to buy Twitter, you buy some now, you buy some under 20. Rick in Utah, Rick.
Hey, Jim. Thanks for taking my call.
You're welcome.
I currently own some AT&T stock, and with AT&T dividend being over 7%, it looks very attractive to add some more AT&T stock to my position. So my question is, do you think AT&T is going to be able to keep paying that dividend?
Okay, so MoffettNathanson had a very negative report out today. They're a very good firm. And I read the report, and it did say that the dividend could be in question. The company has disagreed with that. But the fact that when I read that, it made me say, oh my, are we reaching for yield? And I don't like to reach for yield. My charitable trust, you can follow along what we do by being a member of my club, the Kramer Club. We own Verizon. Safer. Let's go to Giovanni in Michigan. Giovanni!
Hello, what's up, Jim? This is my son Giovanni. He's a young investor and has a question for you.
Absolutely.
Yeah, Jimmy Joe.
Yo. My wife told me. Hey, just a sec. Who's this young boy? We have his name? Oh, the boy Giovanni. Oh, I thought the dad was Giovanni. All right, Giovanni, what do you got?
My question for you, Jim, is with Tesla being delivery expectations and the stock going lower throughout the day, do you think the stock is a buy or sell in the market environment right now?
Well, Giovanni's a young person, and I think a young person should bet with Elon Musk. And those numbers were good. By the way, the numbers come out immediately, and the bears say, listen, it's another idiot fiasco, blah, blah, blah. All I can tell you is I think the guy's real, okay? And we changed our mind and started liking it in the 300, goes to 900, goes back down. I'm a believer. I would leave her. Nice. I follow Mickey Dolenz, by the way. How about Giovanni? Isn't that great? Let's go to William in New York, please. William.
Hey, booyah, Jim.
Booyah, William.
Hey, I know you had Abbott Labs on a few days ago, but I have Bio America. It's been up and down the last few days. How do you feel about this company?
No. You don't put those in the same sentence there. We got Robert Ford now, a new CEO at Miles White. Don't put Abbott Labs in Bio America. We're a buyer of Abbott Labs right here. It is too inexpensive. I like the stock. Yours is too speculative for me. Anyway, it's a treacherous time. We may be headed into maybe depression, but the depression will end. It ends because this is a biological problem, not a financial one, but it's become a financial one. What am I tonight? With news that Corona beer is holding production because of the coronavirus. Wondering what's ahead for Constellation Brands? I've got the CEO, and by the way, they've got plenty of beer, so don't worry about it, and join me in one later tonight. And is it possible to find any stocks with no hair on them? I'll give you my take. And looking for an under-the-radar play on the stay-at-home economy? I've got one for you, and I'll review it. So stay with Kramer.
Don't miss a second of Mad Money. Follow @Jim Kramer on Twitter. Have a question? Tweet Kramer. #MadTweet to most subscribers.
Here's something you probably don't know about erectile dysfunction. 52% of guys experience ED at some point. And here's something you probably do know about erectile dysfunction. 0% of guys like talking about it. Fortunately, Roman is here to help. With Roman, you can go online and connect with a U.S. licensed physician who can treat erectile dysfunction. If treatment is prescribed, we'll ship medication right from our pharmacy to your door. With Roman, you don't have to spend time in waiting rooms or make uncomfortable trips to the pharmacy. Visit GetRoman.com, chat with a doctor, and if safe and appropriate, get genuine medication delivered in discreet, unmarked packaging. And now that brand name ED meds have gone generic, it's more affordable than ever to get treatment. Start your free online visit at GetRoman.com/CNBC. That's GetRoman.com/CNBC. Eligibility requirements and additional terms apply. Visit GetRoman.com for more details.
Now is the time to be smarter than ever about protecting yourself from germs. Hi, I'm David McNeil, founder of WeatherTech. Our American-made floor liners and cargo liners have always protected your vehicle. But here's something else important that you should know. Unlike ordinary carpet mats, the durable, non-porous surfaces of WeatherTech floor liners, cargo liners, and even cup foam can be easily cleaned and wiped down with disinfectant to keep your vehicle and phone sanitized and germ-free. Keep your vehicle clean and keep yourself safe. Learn more about all of our products at WeatherTech.com.
Insight.
A CNBC investigation revealing how
Your money on the line.
Dow up triple digits just on this report. A new invitation from Beijing.
Squawk Box. Weekday, 6 a.m. Eastern. CNBC, Sirius XM 112.
Okay, how bad will the lockdown be for the alcohol business? Over the past 6 weeks, the group has been hammered. Constellation Brands, the maker of Modelo, Pacifico, and the inaptly named Corona, along with a host of wine and liquor brands, has seen its stock plummet from 210 to 132. Now, some of that makes sense. In normal times, Constellation does brisk business supplying bars and restaurants, most of which are now closed. But at the same time, we've seen a massive surge in consumer alcohol sales because how else are you going to cope with this dark lockdown? So Wall Street was hoping for some enlightenment when Constellation reported this morning, and the actual results were phenomenal. For the period ending in February, the company posted a monster 42-cent earnings beat off a $1.64 basis, much higher than expected sales, up 6% year-over-year. Beer business in particular did very well. However, management declined to provide forward guidance because we have no idea how long the lockdown will last. Without clarity in the future, the stock got hit in the morning, but later rallied in the afternoon after the conference call was completed and managed to end positive in a really bad day. I think we need more context here. So let's check in with Bill Newlands, the terrific president and CEO of Constellation Brands, find out more about the quarter and how his company's holding up in a coronavirus world. Mr. Newlands, welcome back to Mad Money.
Thank you. Good to be here, Jim.
All right, Bill, I got to tell you, I read through the quarter, and the quarter was downright remarkable. And what was really incredible to me was there were a lot of people who said, you know what, the beer story's over. I'm starting to believe that the beer story's just beginning because the times are tough.
I think that's accurate. You know, one of the things you always see in tough times and recessionary times is people buy the brands that they trust. And when you think about Modelo and Corona and The Prisoner and Naomi and Kim Crawford, we have a lot of brands people trust, and that's what they go to in tough times like this.
Can you explain for people what happens in terms of at home versus bars and restaurants that are closed? Because it seems to me that people drink beer wherever they are.
Right. You see a lot of channel shift, and you see this in many recessionary environments. Now, this one, admittedly, is a bit uncharted because one piece is really closed, which is the on-premise, as you know. And you do see channel shifting, and you see people buying more, and you see them consuming it at home. And given that 85 to 90% of our business across all three sectors is done in the off-premise, it really works to our advantage to some degree.
You don't have to tell me, but when I was going over the quarter, if it had not been for this tweet about essential, non-essential, I think the stock would have been up 10 points, and maybe even 15, or a really bad day for the market. So can you just explain what it matters, deem non-essential versus essential, and the fact that you got enough beer on hand that we shouldn't even be thinking about this yet?
No, you shouldn't be, because we have over 70 days on hand between our DCs and our distributors. And as you know, in this country and in Canada and likely in Mexico, you see certain things deemed essential. In this country, alcohol beverage is deemed essential. And so the opportunity to continue to sell and to meet consumer demand is there, and we have the supply to do it.
Now, two exciting things. We now got the Spice Seltzer. How's that going? You have a little read?
Oh, yeah, it's off to a great start. We already have ACV approaching 50% in the first month, which, given there were some challenges at retail this month, we're pretty happy with that. Velocity is going very well. It's improving week to week. We're very excited about the success of seltzer so far.
And then the other, your Canopy drink. I guess we can't get that here, right? And the edibles. But the edibles and the drinks, how are they selling? Because it looks like you were exactly what we thought, the last man standing. Nobody else really has any money in that business except for you now.
Right, we're well capitalized at Canopy. And I got to tell you, I was up there 6 weeks ago, and we tasted through the beverages, and I think they're game changers. They were outstanding. And having been in this business a fair amount of time, I think I have a reasonable palate, and they're superb. And I think they're really going to make a big difference for Canopy going forward.
Okay, just enlighten us on this, because I think that I was always worried, well, what's the proof? How many can you have? What's it like? Do people drink it at home? Because I'm worried that, frankly, I don't know how much it would take. Do I do 5 and I'm buzzed? Or how does it work?
Well, this is where brands are going to matter. And this is why the work that we're doing is all around the branding, because people want to have trust. It's the same thing I said a minute ago about Modelo and Corona, is people trust those brands. And they're going to want to have trust in brands that they consume in the cannabis space as well. And I think that's one of the main things that Canopy is going to bring, is that capability and that bankroll to be able to talk to consumers about why these are exceptional beverages and why you can get a consistent experience time after time.
You got a new CEO there. He's a person we all know. He's a business person. How is he making that into a real business now?
He's bringing focus and discipline, which admittedly was one of the real things that was required there. So we're very pleased with what he's done so far. He's focused on getting Canada to profitability. He's focused on getting to cash flow positive. And we couldn't be happier with the start that David's had there. And as you said, he's an excellent business person, and we think that he's going to be a great leader for that business going forward.
Yeah, I'm sorry, this did Clem. He used to be the CFO of Canopy, and someone I got to know very well. And he's a fantastic business person, which is what that industry needs. Don't have a lot of them. Now, here, just a couple things. Modelo Especial, out of nowhere, number 4 brand.
It is. And you think about places like California, it is bigger than the next 2 premium domestic light brands combined. It's a huge brand in many critical markets. It's number 1 in Chicago. It's number 1 in the state of Nevada. This brand is just scratching the surface, considering that it is the number 4 brand overall in the United States.
And then Corona Premier out of nowhere.
Second year, we were up 19%. It's done extremely well again. And it really meets that betterment proposition that a lot of consumers are engaged with today. You think about it, it's low carb, low cal. This is what people are looking for, and it fits in a perfect niche with a brand that they trust in Corona.
And debt pay down at $1.4 billion for fiscal year 20. Still giving, you've been able to pay down a lot of it. The flat cash flow is still great, right?
Cash flow, we had our best year ever in cash flow. As you know, when you play in the premium end of the business, you're playing in the growth end, plus you're playing in the higher margin end,
right,
which gives us a great cash flow and allows us to pay down our debt.
Hey, let me ask a last question, but why do companies have to give guidance? There's no way you know what's going to happen. You got your business, you put your nose to the grindstone, and then why do we have to focus on some forecast when it may be depending on some doctor who solves a problem here?
That's right. When you look at our March has been superb. But some of that's obviously pantry loading, and you really don't know where it's going to land. We viewed it as risky to say too much because we study this very carefully. We know what happens in recessions, but it's uncharted waters. And we felt that rather than giving something that we had less than perfect confidence in, we'd be better off giving guidance later when we had a much better understanding of how things were going to work out.
Well, look, I appreciate you coming on. I wish it hadn't been such a bad day, this stupid tweet, because what matters to me is that you were building the base for a recession stock.
We're recession resistant, and
sure
that's good for our category.
All right, great to see you, sir. That's Bill Newlands, President and CEO of Constellation Brands STZ. It's what you buy when you're going into a recession. And money's back in.
I'm Eric Ray, co-founder and CEO of Podium. A few years back, my dad called with a problem. Despite having tons of happy customers at his local tire shop, only a handful of angry ones left online reviews. He was stuck with an online reputation that didn't match how customers really felt, and he wasn't alone. With Podium, getting more reviews and keeping customers coming back can all be done through messaging. It makes interacting at every step of the customer journey as easy as sending a quick message. See for yourself how over 40,000 businesses like yours have given themselves an unfair advantage with Podium. Visit podium.com/deal for a free demo and get 10% off when you start.
Dream of owning your own company? Decorative concrete is one of the fastest growing trends in home remodeling. And Concrete Craft, the billion-dollar industry leader, has franchises available in your area.
What really drew me to Concrete Craft was low overhead, a small amount of team can get you to pretty good revenue.
As a Concrete Craft franchise owner, you're not pouring concrete. You're transforming ordinary concrete into extraordinary designs with support from Concrete Craft.
They teach you the marketing side, the sales side, how to do a quote, and then all the way through installation and mixing and colors and different products. You can't learn all this in 2 weeks.
Invest in your future today. Learn more at concretecraft.com/radio or call 888-81-CRAFT. Plus, find out how you can get free airfare and hotel for Concrete Craft Discovery Day. That's concretecraft.com/radio or 888-81-CRAFT. This is not an offering to sell a franchise. Franchise offerings are only made through your franchise disclosure document. Call and ask for details.
Hey everybody, Mark Yeager at Redland Cotton. The other day someone said something really offensive to me and it really hurt my feelings. At home that night I found my safe space in my wonderful Redland Cotton sheets. I even looked at some photos of my cows on Instagram. They are my therapy animals. Find your safe space. Go to redlandcotton.com and we'll send you some cow photos too. Shop at redlandcotton.com. That's redlandcotton.com.
Sirius XM. This is Sirius XM. Getting harder and harder to find stocks with no hair on them. When a stock has hair on it, it's not like this. It's like finding hair in your suit. Something's very wrong. You didn't anticipate. I don't mean the obvious losers. I mean, if you put an alien retailer, a smash restaurant stock, a Gap, or a Macy's, a Brinker, you knew what you're getting into. Sorry. No. I'm talking about stores like Johnson & Johnson. That's a classic recession stock and a long-time Kramer fig. J&J is the best pipeline in the industry, not to mention one of the few AAA balance sheets on Earth. This is exactly the kind of stock that should work during a slowdown. Except not this time. See, this time there's some hair on it. J&J has a division that sells knee replacements, and with every hospital bed taken up by coronavirus patients, you need to hold off on that kind of stuff. With the stock down $20 from the high, I think the negatives are baked in here. We are in it for the trust. We know what we're actually anxious to buy more. But there's always some big shareholder out there who hasn't even heard yet that they have something involved with knees and elective surgery, and they're eager to write off J&J as a bad business because of the subpar orders and replacements. Same thing happened with Coca-Cola. Now, I've always felt, this was the ultimate recession-proof stock until an analyst recently pointed out that Coca-Cola's bottlers may need some support here. And that could put a real dent in their earnings. Again, we should be used to this by now, but there's always someone who doesn't seem to know this stock still sells at 21 times earnings, and that's certainly a high multiple for a company that might have an open-ended spending problem. I ran into the same problem with one of my faves called AbbVie. We own it for the Travel Trust. You can follow along by joining the ActionAlertsPlus.com club. It's got a fantastic dividend. AbbVie's acquiring Allergan. Remember them? And they're doing mainly for its Botox franchise. And that's a great business long-term. But right now, doctors are loath to do non-essential procedures, which definitely includes, yes, indeed, cosmetic surgery and Botox. Sadly, we're all just going to have to live with the wrinkles on our crow's feet for the duration. Now, there are worse hardships, but it's putting a wrinkle in AbbVie's numbers. Oh, how about the switcheroo in United Technologies? The big breakup and then slash merger with Raytheon. It finished today. Greg Hayes, the one I was quoting the street this morning. Ever since the initial coronavirus outbreak in China, United Technologies' Otis Elevator division has been an albatross around its neck. That's why we've been reluctant to buy the stock for the trust. Now, though, United Technologies and Raytheon have merged, giving you a premium aerospace and defense contract. Unfortunately, that's not as great as it used to be, because aerospace has got tons of hair on it. It's got a bear market now. As for carrier, the heating, ventilation, air conditioning business that have been so red hot when there's a lot of construction, well, there's not a lot of construction in the year of COVID. Suddenly, which is the good one? Otis. Otis is the one division I really like because it's so focused on China. And now that China's beaten COVID, they've got the strongest economy in the world. Save maybe Taiwan. It's insane. Finally, there's the recession-proof stock that I think the world of, and I'm talking about McCormick. Yes, the spice and seasonings maker. They're thriving here with so many people cooking at home. And by the way, remember that people staying at home doing their work. However, McCormick also gets about a quarter of its sales from food service and food supply. Then they give it to restaurants. You've seen their stuff. And that division is basically closed for business. Fortunately, the stay-at-home story is so fabulous for the consumer business that it more than makes up for the commercial weakness. And that's why McCormick's a terrific story. The only problem?
There's always some schmo who doesn't know about the commercial exposure, which is why the stock got clobbered when it reported. Now, though, I think McCormick's been immunized against those worries. If you don't know already, I think in one of these downdrafts, you know we're going to get next week, I'd be a buyer. How about we go to David in New Jersey? David!
Hey, Jim. Booyah from Point Pleasant down to Jersey Shore.
Oh, man, I miss Point Pleasant.
Yeah, well, they closed the beaches anyway. I
know.
There now.
Yeah, I want to go down to Ocean Grove with my daughter, but I can't see my daughter because we're all under lockdown separately from each other. This is crazy.
Yeah, well, maybe I'll have some time to read a couple of your books that I have on the shelf now. Anyway.
I'll take that. Thank you, sir. So what's going on?
Yeah, so, I'm looking for some accidental high yielders, and I came across Walgreens, WBA. They have a pretty good dividend. They got a pretty good earnings report, and they're sitting at the year lows. I'm wondering if that's pretty good.
Well, David, I'm going to save you some trouble. I'm going to save you some trouble just in case I ever see you. Jenkins down there in Point Pleasant. Here's the problem. They had a really bad last half of the quarter, and I think they're sliding it. The next quarter is going to be bad. People aren't going to the stores. I want you to stay away from Walgreens. If you want yield, that is not the way I want to get at WBA, but thank you for the kind words and buying the books. Robert in California. Robert!
Booyah, Kramer. Robert from LA. My question is, as we know, lots of people are working on the COVID vaccines and treatments, including companies like Gilead, Regeneron, and Abbott Labs. My question is, how much is already priced into some of these names, and which one would be the better trade?
Well, I will tell you that I'm hearing pretty good things anecdotally about Gilead, hearing better things about Regeneron. Abbott already is fantastic because of the test, although they've got to ramp that test up more than just 50,000. The Gilead has moved up, and Regeneron was the best performing stock in the S&P. But you know what? I will still endorse Gilead. I think that there's some good news. It's not going to knock out the thing, but some good news. Gary in Texas. Gary.
Hey, Jim. Like everybody, I was a little unnerved by this viral earthquake, but I was hanging in there, but I'm afraid it's going to be followed by an economic tsunami, so I ended up liquidating everything. At least I made money. I had it all on Shopify, which I love. Thanks to you, I picked it up at 176 15 months ago and just sold over 400. But anyway, I'm anxious to get back in, but I still foresee more bad news than good news in the near future. I think, someone famous is going to die, or unfortunately, the death rate's going to hit 10,000 or 20,000. And so my question to you is, I know you're going to tell me to, when I get back in, to do it in stages, but the tip I want is when to look for the first stage to start getting back.
Okay, it's a great question. And here's the issue. And I do like Shopify so much. And I was telling people yesterday when in the midst of the big sell 2 days ago, when they pulled their guidance, this is ridiculous, you want to buy it. But the stock is only down 10%, sure. It's at $41 billion in market cap. We started liking it at $20 billion in market cap. How about we split the difference? And when it gets to $30 billion, we pound the table. But if you were to buy some when we're going to be down next week, yes, and it's right, I do like to build it in a pyramid fashion. I would get started. Shopify is one of the greatest companies on earth. It was a big hit for us from our Chapman Trust. All right, it's getting harder to find stocks with no hair on them. But these are a few that you can consider buying. And I think they're going to work. And remember, with Raytheon Technologies, really, it's the Otis division that is now independent that I like. Once you remember that money, including my exclusive with a company flying under the radar in the new stay-at-home reality. I'll reveal the name. Then, as one of the first communities to experience the devastation of the coronavirus, Seattle seems to be emerging as one of the first localities to offer a plan. I've got the exclusive of the man who's working to figure out what's needed most in the Emerald City. And all you call rapid fire, tonight's edition of the Lightning Round. So stay with Kramer.
Is back. His songs, his stories, his channel. It's in 1964, going into New York, running around the train station. The Beatles came to America from Billy Joel channel. His own radio station returns. On now, Sirius XM Channel 30, or download the Sirius XM app. Listen at home. Andy, and this is Dave. We're the founders of Bombas, makers of the most comfortable socks in the history of feet. So comfortable, we've sold and donated over 8 million pairs. Yes, donated. Why? We learned that socks are the #1 most requested clothing item at homeless shelters. So we started Bombas with the mission of donating a pair of socks for every pair we sell. To donate and sell a lot of socks, we became obsessed with comfort. We reinvented the sock from the ground up, using the best materials available, like the softest and most comfortable cotton. Getting rid of what wasn't working, like that annoying toe seam you could probably feel if you wiggle your toes right now. And inventing a few new comfort innovations along the way, like arch support that feels like a hug around your midfoot. It worked. People tried them, loved them, told their friends about them, helping us sell and donate over 8 million pairs. Try them now at bombas.com/CNBC and get 20% off your first order. That's BOMBAS.com/CNBC.
What's a Zoom room? It's what your conference room is meant to be, with flawless video and audio conferencing, instant wireless content sharing from any device, and just one tap of a button to start a meeting. Any space can easily become a modern, simple-to-use Zoom room. From huddle rooms to executive offices to huge training rooms. And whether you have a few rooms or a few thousand, Zoom Rooms is effortlessly scalable. Sign up online for a free 30-day trial of Zoom Rooms and meet happy with Zoom.
CNBC is everywhere. On Apple TV, Google Assistant.
Okay, Google, I want to talk to CNBC about the news.
Roku, and Amazon Echo.
Alexa, ask CNBC, how are the markets doing?
CNBC, first in business worldwide. Sirius XM 112.
Here's a question. We know to avoid the obvious losers from the shelter-in-place economy, and we know to stick with the obvious winners. The companies that make more money when we're in lockdown. But what about the companies in the middle? Take Zebra Technologies, a leading player in the enterprise asset intelligence space, which creates end-to-end solutions that allow its customers to keep track of people, equipment, and data. On one hand, Zebra's an important cog in the logistics machine, so in theory they should benefit from the explosion in e-commerce that makes the stay-at-home economy possible. If retailers can only operate online, this would be a great time to upgrade their infrastructure. On the other hand, Zebra's also got a lot of exposure to fleet management, and in this environment, many of those cars and trucks may remain parked. They also have manufacturing exposure, so if plants close, that's also bad for business. But here's the thing. Zebra stock has already plunged from $252 to $178 as of today. At these levels, I gotta wonder if maybe the negatives starting to get priced in. Let's get closer with Anders Gustafsson. He's the CEO of Zebra Technologies to get a better read on how his company's holding up and how the current crisis could change the way we manage our supply chains. Anders, welcome back to Man Money.
Thank you. How are you?
Well, I don't know, man. I'm kind of glad it's the end of the week, I'll tell you that much. So, Anders, let's get right to it. If I am a gigantic e-commerce company, I know that a lot of my stores are closed, but I am crushing in e-commerce. I've got huge warehouses. I got to figure out where everything goes. I got to time it right. I got to get UPS in there. I got to get the post office in there. What does Zebra Technologies do for me to make it work?
Well, first, we supply or support many of the companies that are providing essential services to the economy today. So that could be e-commerce players and regular brick and mortar retailers that have seen their e-commerce or omni-channel businesses improve. So I'd say the biggest change in buying behaviors from a retail perspective, I think, has been around grocery, where there's been a lot of reporting around how grocery volumes are up quite a bit, but the way people have been buying those groceries have changed quite dramatically, where people are buying online, picking up in store, picking up at curbside. That has grown exponentially, I'd say.
So where are you at playing that? I think people don't understand that the right box, the right thing comes to you because of Zebra.
Yeah, no, we help retailers, brick and mortar retailers, make sure that their supply chain or their merchandise can be stocked, that their supply chains keep flowing and their shelves are stocked, as well as making sure that they can scale these new omni-channel buying behaviors properly.
Well, I am so glad you're on, because I've got to tell you, one of the things that's happened in this pandemic is we have discovered that we don't know where anything is when it comes to healthcare. Whether it be the ventilators, whether it be the PPE, this protective gear. If you were made SAR of the PPE logistics, what are the actions you would immediately take to get a better handle on the global PPE supply chain?
Well, first, I'm confident I won't be made SAR of the PPE world. If that were to happen, we would be in trouble. Second, I'd say though that we have deep appreciation for all the people on the front line who are truly helping ensure that the world continues to operate in some form, and that we have some level of normalcy in our lives here. Zebra, we're not a transportation logistics company, but we provide solutions that enable logistics or frontline employees in logistics companies to operate more efficiently. In distributing PPE equipment as an example, or any other kind of merchandise or goods. So we help transportation logistics companies get much better visibility into what PPE equipment they have, or any other kind of inventory they might have. We help them locate it, and we do this in real time, and we also help them orchestrate the workflows and the how the goods flow through their supply chains.
Now,
and we help them do this at scale.
Now, I've been a huge fan of the company for a long time. But some of the analysts were unhappy. You got this gigantic post office contract. I know who lost it. It was painful. And there were some people who said it was delayed. And because it's delayed, they don't really like your stock as much as they used to. Is it possible that maybe it could pull forward and happen sooner? Because I think these people who were naysayers were just a little let down that this USPS thing didn't occur instantly.
So first, we won a number of the largest postal systems worldwide, and the USPS has been our largest contract to date ever for the company. So we are very excited about the new the expanded relationship we have with USPS and how we can help them optimize package delivery and execution across their letter carrier networks. The rollout is really determined by USPS, and the end date today is around 3G service. They have to have all their new devices deployed before 3G service is taken down, which is expected to happen by the end of next year. So, we are currently forecasting based on the information we have from USPS about the delivery schedule, but they could be, they certainly have the ability to pull it in.
Okay, good, because I hate to give up on something that is obviously so huge and will be in the big numbers coming up. Anyway, thank you so much, Anders, for coming on the show. Always great to talk to you, sir.
Thank you so much.
Anders Gustafsson, CEO of Zebra Technologies, integral to the e-commerce and logistics world. And Mike's back into the room.
So now I've got this pack of 4 Shar-Pei rescue dogs for, oh my goodness, probably 5-6 years. They get a regular diet of Dynavite with every meal. DINOVITE.com. People remark on what beautiful coats they've got. I tell them, you don't need to wait until a problem presents itself. It's far better to keep a dog happy and healthy at all times. You won't believe how happy your dog will be. I get my Dynavite from DINOVITE.com.
The clock is ticking. Every day you put off buying life insurance can cost you big time. The older you get, the more you'll have to pay. And a sudden accident or unexpected illness could cause your rates to skyrocket or even make you uninsurable. Beat the clock. Call SelectQuote now. No hassle, no obligation. In minutes, you'll have a choice of your best rates from up to 10 highly rated life insurance companies. Richard, 40 years old, takes meds to control his cholesterol. Still, SelectQuote got him a 10-year, $500,000 policy for under $25 a month. Under $1 a day. Don't risk your family's security another minute. Get your free quote now. Just call 1-800-556-8400. That's 1-800-556-8400. 1-800-556-8400. Or go to SelectQuote.com. Since 1985, we shop, you save.
Get full details on the example policy at SelectQuote.com/commercials. Your price could vary depending on your health, issuing company, and other factors. Not available in all states. If you have sensitive teeth and gums, it's time to try a better toothpaste. Most toothpastes have harsh, abrasive ingredients that may be causing canker sores and sensitive, painful teeth and gums. But Closest toothpaste is like first aid for your mouth. Closest is gentle and sulfate-free to guard against sores and less abrasive.
for sensitive mouths. And Closest has fluoride to prevent cavities and strengthen enamel. Get Closest toothpaste and Closest oral rinse now. That's CLOSYS at CVS, Walgreens, and Walmart.
You're listening to SiriusXM Radio.
After hours market action.
If you're in the market, you're probably feeling pretty good right about now.
What will tomorrow bring?
How do I want to hedge my portfolio in this?
Experts explain their top trades.
Our traders have picked stocks that will light up your portfolio.
Plus money. Weekdays 5 p.m. Eastern, CNBC, SiriusXM 112.
It is time. It's time to light her up about and then the lightning round is over. Are you ready, Steve? Over the lightning round. Let's start with Neil in Virginia. Neil.
Hey, what's going on, Jimmy? Chill.
The chill's in the house.
Hey, what's going on? I got a question about Alteryx.
Well, Alteryx is the kind of stock that when the smoke comes out of this market and we go back and see what really works, it is better software than what we have. People don't like these stocks right now. They always come back because they've got great growth. So I'm going to say, fine. Let's go to Sherry in Massachusetts. Sherry. Sherry.
Hey, Jim. How's it going?
It's going well, Sherry.
Thank you for taking my call. I enjoy your show. I look forward to it every night. My question is, what are your thoughts on Invitae?
Oh, very, very, very dicey. You know what? We have got so many fabulous companies that are much, that have come down so much. I would rather just see it by Johnson & Johnson, to be honest. Let's go to Robert in Arkansas. Robert.
I'm on hold for a TV show on business channel CNBC.
Hello?
Hello?
Who's that? Is it Robert's boy? Hello? I'm sorry, I can't understand. Can I go to... What? Who am I speaking to?
Go. Hello.
Hey, who's on?
This is Joe.
Joe, yeah, give me a stock, Joe.
Yes, I was interested in Delta Airlines.
No, you're not interested in Delta Airlines. You could be interested in any airline because a lot of these airlines are going to end up having to take money from the government, and by the time they do that, then you're going to be able to pay. You're going to be so diluted that we're not going to make any money. So I'm going to say stay on that one. Let's go to David in Florida. David.
Booyah, Jim. First time, long time.
Okay.
I'm 24. I'm setting up a dividend reinvestment plan. I'm looking at the Dividend King, Realty Income. What do you think?
No, you're 24. I want you to go for growth. You can plenty of time to get income. You got to go for companies that are down and out stock, but fantastic growth. You should look at a stock like Alteryx. That would be good. Or we have Okta on last night. That's a fantastic Constellation Brands. Be with something like that. Let's go to Bianca in California. Bianca.
Hi, Jim. This is Bianca from California. So Upwork stock has plummeted shortly after IPO, even with having a strong year-over-year revenue and gross margin growth. So with unemployment rates climbing and people probably looking for alternative sources of income, do you think Upwork is a good long-term buy while its stock is down right now?
That is an interesting idea. You know what? I am glad you brought that to my attention. Let me do some work on that. That's one that is new, and I don't know, and I want to give you a more considered answer. Let's go to Richie in Pennsylvania. Richie.
Jim, how you doing, sir?
I'm good. How are you?
I'm good. Trying to stay away from the COVID.
Smart.
My question is about Switch, SWCH, with the things going on in the data center.
Look, I think a data center and any connected with it is fine. I was just Digital Realty. I think Digital Realty has a little more going for it. But you know what? You want to go with Switch? I'm going to bless it. Why? Because the data center is hotter than it's ever been because of the amazing amount of traffic that people who work at home are generating. Let's go to Lisa in Virginia. Lisa.
Hi, Kramer. How to talk. Thank you for everything you do on CNBC. My question is, what do you think of Nokia in the future?
No. I mean, look, if you want to go there, we had Marvell the other day. They got a good deal with Nokia, MRVL, but Nokia itself is not good enough for your money. And that, ladies and gentlemen,